Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden financial stories behind company filings. And this week, WESCO International is here to tell us a story about changing their corporate identity a bit, or should we say their founding documents. So what's going on with WESCO International? This report is a Form 8K, a type of filing companies use to announce major events. W's telling us they've made some changes to their official company papers, the things that lay out the fundamental rules for how the company operates. Think of it like updating the company's constitution. They filed a certificate of amendment and then a restated certificate of incorporation. They've also updated their bylaws. The big reason for all this paperwork is to give shareholders more power to request special meetings of the company's owners, the shareholders. This is a pretty significant shift. The main event here happened on July 16th, 2025. That's when WESCO officially made these changes. WESCO International stock is traded publicly on the New York Stock Exchange under the ticker symbol WCC. This means anyone can buy or sell shares of the company, and because it's on the NYSE, it's subject to pretty strict reporting rules like this one. The core of this report falls under item 5.03, which covers changes to the company's foundational documents like its articles of incorporation and bylaws. Essentially, WESCO is telling us they've amended their main charter, the restated certificate of incorporation. This amendment specifically grants shareholders the ability to call for special meetings. Previously, this right might have been more restricted or not available at all. Now, shareholders who meet certain criteria will be able to gather support and demand a special meeting outside of the regular annual meetings. This is a move that typically gives more power to the owners of the company. This change didn't just happen out of the blue. It was actually approved by the shareholders themselves at their annual meeting back in 2025. So this isn't a top-down decision that shareholders are reacting to. It's a move that the shareholders themselves voted for. This implies a desire from the owners of WESCO for greater say in how and when important company matters are discussed and decided outside of the planned yearly gathering. After filing the amendment, they also filed a restated certificate of incorporation. This basically means they compiled all the current rules into one single updated document. It doesn't introduce new changes beyond the amendment itself, but it makes the company's governing documents cleaner and end easier to read, incorporating the new special meeting provision. It's like getting a new edition of a book that includes all the updated chapters and errata in one place. Along with the certificate of incorporation changes, they also updated their bylaws. Bylaws are like the company's internal operating manual. These updates specifically lay out the procedures and rules for how shareholders can actually exercise their new right to request a special meeting. This includes things like how many shareholders need to agree how much of their stock they need to own, and the process for submitting such a request. It's the fine print that makes the new shareholder power functional. For more detailed information about this specific amendment, including the exact language and the reasoning behind it, WESCO refers us to their proxy statement that was already filed back in April. This is common practice where if a topic was discussed and explained thoroughly in a prior filing, like a proxy statement for a shareholder vote, they'll just point back to that document for the nitty-gritty details to avoid repeating themselves. Now, what are the practical implications of this for WESCO International and its shareholders? Typically, giving shareholders the ability to call special meetings is seen as a good governance practice. It can enhance accountability for management and the board. If shareholders are unhappy about something specific, a major acquisition, a change in strategy, or even concerns about executive compensation, they can now more easily organize and force a discussion or a vote outside the normal schedule. This can be a powerful tool for bringing about change or resolving disputes quicker. For WESCO specifically, this suggests a commitment to becoming more responsive to shareholder concerns. It could lead to more engagement between the company and its owners. However, it also means that if a significant group of shareholders becomes dissatisfied, they have a more immediate avenue to express that discontent. It's a double-edged sword. It empowers shareholders, but also potentially makes the company more susceptible to activist investor campaigns or rapid responses to market events. The fact that this was approved by shareholders at their annual meeting is crucial. It shows that at least a majority of the voting shareholders saw value in this added flexibility and control. It wasn't forced upon them. It was a voted upon enhancement of their rights. This might also signal a broader trend in corporate governance where companies are increasingly adopting shareholder-friendly policies to attract and retain investment and to avoid potential conflicts. Looking at the amended bylaws, the devil is truly in the details. These documents will outline the threshold for calling a meeting. For instance, it usually requires a certain percentage of outstanding shares, say 10% or 25% to sign a request. They'll also specify the notice periods required for such meetings and what information must be included in the notice. These procedural elements are vital for ensuring that the process is orderly and that all shareholders are properly informed. Without clear bylaws, managing these special meetings could become chaotic. When we look at the overall context of WESCO International as a company, it operates in distribution and logistics, a sector that can be quite competitive and sensitive to economic downturns. Companies like WE interesting in such an environment where strategic pivots or efficiency improvements can have a rapid and significant impact on the bottom line. This move towards greater shareholder power is something many investors look for as a positive sign of good corporate governance. It can align the interests of management more closely with those of the shareholders. If management knows that a dissatisfied shareholder group can easily call a meeting to vote them out or challenge their decisions, they're likely to be more attentive to shareholder needs and concerns. We don't have detailed financial tables in this particular filing, as its focus is on corporate governance changes. However, it's worth noting that these kinds of changes often happen when a company is preparing for significant strategic shifts, or perhaps after a period where shareholder activism has been present or anticipated. It's a proactive step to manage how the company is governed and how shareholder voices are heard. So to sum up, WESCO International has formally updated its core governing documents to empower its shareholders with the right to request special meetings. This change was approved by the shareholders themselves, and the details of how this will work are laid out in updated bylaws. It's a move that signals a greater emphasis on shareholder democracy and accountability within the company. Now, looking at WESCO International itself, this governance change is a signal about their approach to stakeholder relations. In my opinion, granting shareholders the right to call special meetings is a generally positive step towards better corporate governance. It fosters a more responsive and accountable management structure. While this particular filing doesn't give us financial numbers to dissect, its implications are definitely felt in how the company might operate and be influenced going forward. It could mean that major strategic decisions will be subject to more direct shareholder company influence going forward. It could mean that major strategic decisions will be subject to more direct shareholder oversight and input, which in a competitive industry like distribution can be both a strength, allowing for quicker alignment on critical issues, and a potential weakness if it leads to decision paralysis or the undue influence of short-term focused shareholder oversight and input, which in a competitive industry like distribution can be both a strength. Alright, that's our breakdown of WESCO International's governance update. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance and governance. Don't forget to check out the Discord link in the description for more community discussions. Thanks for watching. See you next time.